Our vision is to be the first one-click financial solution in Japan. We're targeting the middle and high income. Our average order value is $276 per purchase. There's some key words there: one-click digital payment and financial solution at point of purchase. Where we think things are a little bit broken in Japan is at the point of purchase. The UX takes so long. It's just painful. If you go to a new merchant, filling in all your credit card details, your name, your address, it takes longer than the shopping. That was the key insight that we had. See a massive change of trajectory in Japan with everything in the ecosystem. I just see things about to take off. And I think that there is a lot more effort by the banks to get things right. There's a lot more effort for the regulators to get things right. I can just see a mind shift throughout the whole system of it's time now. It's time we do it. I sense it in the market.
You have just heard from Sam Ahmed, co-founder and CEO of Smartpay, the first all-in-one payment experience and interest-free buy now pay later solution built to solve Japanese consumer payment issues and improve merchant conversion rates. Sam is recognized as one of Asia-Pacific premier digital economy leaders and investors, and has been on 4 Asia-Pacific executive leadership teams for $20 billion businesses before founding Smartpay. So let us dive right in.
Again, thanks, Sam, for taking the time for the community, and very happy to have you here. Please take it away.
I don't profess to say we have all the answers, but I will say that we're trying, and we're very much trying to improve the UX of digital consumer finance in Japan. We're really passionate about changing one thing. We think finance in Japan is very complex. We think it's confusing. We think it takes too much time and it causes stress. The financial sector should actually make consumers feel good. We've seen markets around the world where they have achieved that. We believe Japan is the key market in the world where this can happen. And I'll talk a little bit about that. But it all starts from a passion of simplifying finance and simplifying a checkout, which is the most scariest part. A little bit about me. Before I joined MasterCard, my career was with Starbucks. I ran Starbucks Asia Pacific, and very lucky to launch a very important product for Starbucks across Asia Pacific. Actually, I know it sounds like marketing, but I launched the biggest loyalty card in the world at that time, which is Starbucks loyalty card. Starbucks is very successful in Japan, very successful in Asia Pacific. I was head of digital, and I was obviously part of the team that launched that. And Starbucks loyalty card really broke a lot of boundaries. This is back in 2010. We were launching really new technology. And this was when Apple phones were even defining what they were going to go with in terms of NFC or Bluetooth. This is when that sort of mobile payment sector was just doing its thing. The loyalty card was really driving that because our loyalty card was on app and in-app. And so it needed all that technology at the point of sale. It needed integration with systems. It needed integration with payments and cards and processes. And so it was a great place to start. I realized that payments wasn't about just technology. It was about ecosystems. That's really grabbed my attention. I then joined MasterCard, and then MasterCard was the company I found with the second biggest ecosystem after Visa. I loved connecting the merchants to the issuers, to the consumers and processors and acquirers, and learning even deeper about that. From there, I went to Standard Chartered Bank, where I learned banking, and I was head of digital for retail and wealth. I realized that banks don't make money from payments. Actually, they want wealth and insurance and mortgages and everything, and payments is just like a real hassle. Then the tech companies came along, and the banks realized we need payments. People were like, no, you don't. It's not profitable. And they're like, no, we need payments. It's the data. We don't have any data. We're losing the data. And they're losing the relevancy and the daily relationships. So payments then suddenly became important. But it was too late because legacy systems are really hard to change in banks. 4 years, billions of dollars. That's where you saw the fintechs and the payment tech companies really boom. And the only reason they boom was 2 reasons: is that I think they're really good at marketing. They're really good at understanding consumer mindset UX and positioning. People like Afterpay and Klarna and Affirm, I don't think they would have existed if there wasn't legacy system issues at the banks. So they came up and they really changed the way people saw how consumer credit and payment could happen. That's when I joined Peter Yan, who was ex-Paidy in Japan. I was running Facebook payments. I was building all the platforms, so WhatsApp, Instagram, Facebook Marketplace, enabling merchants to buy advertising, number one. Number two, allowing them to sell products in-app so they didn't have to go outside. And then thirdly, building very new technology like WhatsApp P, WhatsApp catalog for businesses, Instagram, which are now rolling out. I did a lot of work in Japan, right? So I used Stripe in Japan to build those platforms. Japan's actually nearly the biggest Instagram market in the world now. It really was an important market. Spent a lot of time there. Spent a lot of time in Japan with Starbucks, MasterCard, and Facebook. That was over 15 years. Then really fell in love with the country, fell in love with the opportunity, fell in love with the culture, as we all do. We decided that we would open the company in Japan, and learning the learnings that Peter Yarn had from Payday and Stripe, and my learnings from Facebook, MasterCard, and also the rollout like Starbucks, we decided to tackle Japan. That's the story of why we chose Japan. That's the first question people ask. And then I might just change gears to, okay, what do you want to be? Our vision is to be the first one-click financial solution in Japan. We want to target the higher middle-income user in Japan. So we're different than Payday. For those that know Payday in Japan, Payday is a very successful company bought by PayPal for around $3 billion about a year ago. They target sort of the younger crew, the crew that don't have credit cards, the 19, 25-year-olds, that discretionary spend. And with Payday, you have to go to the convenience store to make the payment. What we're doing is a little bit different. We're targeting the middle and high income. Our average order value is $276 per purchase. It's 3 times higher than Payday. Our average age is 34. So it's a lot higher than Payday. I'll talk to you how we did that, but we're targeting that sort of next level up. They do need different products, they do different brands, and they do need different experiences. We purposely built different so that we could say to merchants, you can have Payday and Smartpay and they coexist. We believe that's the case. There's some key words there: one-click digital payment and financial solution at point of purchase. Where we think things are a little bit broken in Japan is at the point of purchase. The UX takes so long. It's just painful. If you go to a new merchant, filling in all your credit card details, your name, your address, it takes longer than the shopping. That was the key insight that we had. The other key insight in Japan we had was I get very nervous giving people my name, my email, my phone number, my bank card, and my address. I wouldn't give someone that on my third date, let alone a merchant I don't know. There is this underlying fear. And then also we're getting a lot of credit card fraud and stolen information in the news. The consumers were seeing that. So that was driving a lot of sales for Rakuten and Alibaba and those places. But for the small merchant in Japan, they're like, why am I getting all these customers on my site? But then they're leaving at the cart. And then there's this realization it is the UX of the checkout. It's not my products. People are scared to give all that information. The last thing I'll say is in Japan, and those that know Japan, is the Japanese consumer, even though they are one of the wealthiest and highest savings rate, they work on a monthly budget. And often the lady of the house will come and have an amount of cash that they can spend per month, and then they will divvy it up. And it's a very much the monthly budget household. And we see that in other countries around the world with similar cultures. Now, yes, they can spend more than that, but if they do, they have a feeling of going backwards. The fear is if I spend more than I budget, I'm going backwards in life. And that fear is an awful fear for them. What we are doing is enabling them to spread their cash flow over a number of months so they can afford the product. It's just, can I afford to give the whole amount this month? Can I spread it out? We look to do that over 3, 6, and 12 months. And we say we're helping with monthly cash flow to people that can afford it. That's very important to us. To do that, we built differently. Right. One, we enabled direct to your bank account payment. We're the first to do that. We use the open API banking, working with SMBC, our key investor, and we worked for a year building the system with Jepo. I'll give you an example. Working with Jepo was fantastic. Most people say working with regulatory is hard. We saw it as part of product development. In the payment solution, when you pay directly from your bank account, it's fantastic, right? So you go in and all your bank accounts will come up, but before they come up, you've got a biometric security step, which is your face, and then your bank accounts will come up, and then you're about to select payment, and you've got to do another biometric. And it was a regulator that wanted us to have 2 biometrics. And I'll be honest to you, we were like, we are about speed and latency, and no, really? And they're like, yeah, we want 2 biometric steps. I actually thankful we did that, because what it's done is it means consumers feel very safe paying from their bank account. Realize if we didn't have those steps, I don't think we would have had the consumer's trust, actually. You do learn, I think you do learn. And I'm not being rude. Working at large multinationals, they often treat regulators like the enemy. I just think that's just so old school. The regulators are just worried about 3 things. 1, consumer safety, that their data and their banks are safe. 2, your consumer technology and safety, stability and security is number 1 in the world. And then 3, they want to make sure that the system is sustainable. that the system can last. They don't care about fintechs rising to unicorns, and that's good luck. It's about sustainability of the system. I was very lucky working with the companies I had. Is I've worked with a Japanese regulator for many years, and Indian regulators, and Indonesian regulators, and Australian regulators. Funnily, they talk a lot to each other. I'm seeing us in fintech now. I think us as an industry are growing up in the relationship with regulators a little bit, and there has to be a partnership. There has to be. So after developing that product, we then had to sign the banks, right? We had to sign 73 banks, and we signed 73 banks in 6 months. Those of you that know Japan, signing one bank in 1 year is hard. We signed 73. It was my team who did that incredibly well. The secret sauce there is that we are helping the banks connect their consumers to e-commerce. We pay them a percentage of the transaction. From a monetary perspective, are monetizing through us, but they also can see that the technology is super safe. The technology enables their consumers to pay directly from their bank account. They make money, the consumer's happy, and the ecosystem's working. That's what I said at the start, is I think we're all in an ecosystem here. Then we have dual acquiring with Adyen and Stripe, and that we're really proud that we both have Adyen and Stripe. They're incredible companies. To have both is really good. That means our authorization rates are really high. We learn a lot from Adyen and Stripe around fraud and risk as well, which in e-commerce now is really incredibly important. With Shopify as well, we've got digital installments with Shopify, which is great. They're not huge in Japan, but it really enabled us to great start and a very good company. We're now on the Japanese platforms. We have a credit card product and a direct-to-bank product so that these consumers can choose. There's some products that consumers in Japan want to use their credit card for points. So we need to enable that to happen as well. That's really the overview. SMBC is our key investor. They're more than an investor. They are a partner. They have taught us a lot around merchant acquisition. They've taught us a lot around moving with the regulator. They've taught us a lot around, which again, I'm sorry if I'm referring to people that know this, but the way you move in Japan has to be very thoughtful. You can't be a startup in Japan. I know that sounds weird. You can't be in a garage and try things and make a mistake and say sorry later. I just don't think that's going to work. You have to change that mindset, which is this has to be 100%. I'm not sure that's a bad thing. It's different than America, where they actually enjoy that you're a startup and going to make mistakes and be fast and a little bit kooky. There's just no way that risk profile is going to work in finance in Japan. We really take those steps very thoughtfully. We spend a year building, and I would say our counterparts overseas would see that as crazy. That's just crazy. But we could not launch until it is 100% work. So that's the overview of the company. The key for us is here on the value side, we focus on that speed, stability, and security. Anyone in finance knows speed and security are diametrically opposed. How do you bring those together? And that's technology. And that's technology that is just really high quality stack that we really focus on. Simple installments. We select very key merchants to the consumers that we want, with our average order value of $276 per purchase. You can imagine the merchants that we choose. And then the merchants are appreciative because we're providing them a customer that's spending more, that will return and will check out. The key is the conversion at the end. So we have a very fast eKYC process for higher purchase orders, and then we cover the 70 banks. We have a very low non-performing loan rate. We're below 1%. Those that know finance, especially in startups, that's very low. We have a very high AOV and a very low NPL through our technology and our AI, our credit risk, our fraud risk, our eKYC. That's something that we've built. We don't host on premise. We have a Japan hosted platform, multi-acquirer setup, SDKs in the language of the merchants in Japan, biometric auth, two-factor verification. All our payment information is encrypted. Even I do not see any of the consumer data. It's fully encrypted, and our consumer data is not stored with us. All payments are monitored 24 hours. So that security was really key. And then obviously our eKYC process is something that we took a long time for. So it's about the ecosystem and how is the risk and banking regulation. It's pretty similar. It's just ask about risk and fraud regulation in Japan. It's pretty similar, I would say, to other developed markets in the world. I wouldn't see much difference. So this is the ecosystem. SMBC is our key partner. We have the 73 banks. Then we have the relationship with the regulator. And relationship with a regulator is like marriage. I'm still scared of my wife, just to be honest. It's still, you're never perfect, right? But it's a relationship. And so there's still anxiety, but they know that we want to work with them. We really want, and we've got the best intentions, right? But we want to move fast. That's where the dichotomy is. Then we have Adyen, Stripe, Visa, Shopify, and the Japanese partners. What we focus on is that tech stack and the risk management in the center of it is the best we possibly can build in Japan. We overinvested for the first year, to the scariness of our investors. And Japan's expensive, right? If you've got overseas investors and they're seeing the cost, that's where you really do, I think, have to overinvest, is the quality in that first year. Then the second thing is I make sure everyone makes money. And I'm really, obviously, very key. The merchant makes money. I charge them money. If they don't make money, I don't make money. They like that. And if I don't grow their AOV and I don't grow their conversions and I don't grow their repeat rates, they drop me. If I don't make the consumer feel safe, easy UX, can pay directly from my bank account and trusted, they're not going to use me. The banks aren't making money and Stripe and Adyen aren't making, they're not. So we really focused on, in our unit economics, how does everyone make money and for us to make money at the same time. That's where we're a little bit different as well. Is I feel that in Japan, different than I would say working in America, is we spend a lot of time making sure the other partners were making money from this from the start. We're really clear on that in Japan. Everyone understands what they're going to get out of it. I think it meant we moved faster than we would have, but it's still slower than overseas. We just have to go at that pace. I'll stop there, and I hope that's a good overview.
Thank you very much, Sam. I had one question on the relationship with the banks. So signing up 70 banks, from the integration perspective, is Japo just an organization, or does it provide a middle layer so you have one connectivity and you go to 70 banks, or does it mean you also had to build 70 times the connectivity, the API connectivity for the direct debit to the individual banks?
I would say probably 70%, not 100%. We have to spend a lot of time with the APIs and the integration. Yeah, it's not easy.
Open banking is one of the things where Japan was very early with the regulation, but it was not really forced. And what they left open in the regulation was the question that you addressed so perfectly, is like, who actually pays for the connectivity? When it kicked off, it didn't really move fast, except for maybe, let's say, the big guns, Money Forward and Money Tree, who had quite a few connections, but everybody else seemed to struggle. It went to the point that, I don't know if it was the FSA or the Bank of Japan, one of them got very worried about the progress. And then over a 6-month period, there came 2 reports basically taking a snapshot of the banks providing the API, right? Contracts have they signed with people using the APIs, and then the payments provider, how many banks have they signed up? That was pre-pandemic. So let's say these reports came out 2019 or so. Since then, this whole open banking space has been pretty opaque for me, I must say. It's very hard to keep track. But the fact that you're saying took you 6 months for 73 banks, it seems like much healthier than I probably would have expected at this point.
I would say that I was very lucky with my team. I had a very experienced team that knew how to work with the Japanese banks and knew exactly what we needed to do. In the last 7 months, I see a massive change of trajectory in Japan with everything in the ecosystem. I just see things about to take off. And I think that there is a lot more effort by the banks to get things right. There's a lot more effort for the regulators to get things right. I can just see a mind shift throughout the whole system of, it's time now. It's time we do it. I sense it in the market.
Christopher, you had a question.
Thanks, Sam, for joining us today. I love that, Sam, that you're talking about ecosystem, because I think a lot of the leading fintech players, not only in Japan, but also, of course, in Asia, in the US, Australia, are leading with that kind of ecosystem mindset. I'm curious, with your experience of tying up with a key FI like SMBC and their venture capital arm, as well as tied into an additional question, how do you see the balance between working closely with partners to build an ecosystem versus competition? I'm curious to what extent SMBC as a good partner was critical to Smartpay being successful. And do you find yourself having to trade off the innovation versus working with the needs of your key partners? Because Japan, as we all know, can be a very different market in that regard.
When I was at Facebook, Facebook is very good at knowing that you have to work within an ecosystem, and if everyone makes money and does well, they'll be there, but it could change next year, but that's fine. It's more about momentum. It's more about, let's move. The danger is if you worry about people competing against you, you don't move. Then you don't create the partnership, and then you don't create the value. We are about moving. Let's move. Let's do this. And I don't think we would have got the 73 banks without SMBC as well. That's probably a part of the mix. I think that you're right saying that. We had a great team though. We moved faster than they even imagined. And I can say that honestly because we had that feedback. They couldn't believe how fast we moved. So that's to your point as well. And then there was a question is Adyen and Stripe and Visa like a competition? I would say no. I think they will always be a partner with us because we will always offer credit card payment as well as direct to bank. So they're happy with that. In Japan, I am surprised that PayPal bought Paydi. That was a very interesting move. And all they're doing is plug it into their system, right? It turns out to be a clever move. I don't think you know the future. It's about a moving puzzle that will always change and you have to adapt to the puzzle versus guessing. We just want to move. That's the approach we take. It could be naive.
That seems successful so far, but thank you for sharing.
It's a great question. Just I don't think we try to answer it.
Organization like SMBC is obviously huge, and so it's almost unavoidable that there are areas where you compete. But specifically, I must say, and it again plays to what you said, that we're maybe on the cusp of a major change because SMBC and Visa came out in March with their Olive card, which is the first deployment of that product by Visa globally. It's a combined debit and credit card, and you can on the app change what it is and how you pay. From that perspective, it is certainly one of the best products in the market, and they've been slowly ramping that up. So you can arguably say that would be like on the debit side, a directly competitive product. But then again, there's 120 million people and not everybody's going to use Olive and not everybody's going to use Smartpay. And some people are going to use both.
Yep.
That's the landscape.
SMBC has been really good in identifying the key people that will partner with us from different parts within their bank to enable us to move and know where to go through that huge organization. We've got 3 people that we partner with that really are incredible. They help us navigate that. And I don't think that would have happened 4 years ago. That's a change. I'm seeing a lot of change in the market.
Sam, is that something you advocated for as you started partnering with SMBC or looking with them, or is that something that they recognized internally and offered to you?
Yeah, it's what they recognized internally. I felt like they'd gone through a learning. It felt like they'd learned that actually these little ants get lost very quickly. And we're tiny, so we're scared to ask, right? Who do you ask in these massive organizations?
Right.
And they've been fantastic at pinpointing the key people. I'm surprised still how much personal relationships is very important in tech companies as well. It's still very much a personal relationship model. We have to consider that in how we organize ourselves, how we sell. And we've had to really make sure that we enable enough time for personal relationships to develop before asking for something. That probably goes back to the point I made earlier. I do have overseas investors, and the first 2 years had to spend a lot of time explaining differences. It can sound like a broken record and you can sound very petty, but in Japan it's like this. But it is different and it needs to be explained. Obviously, I've invested my time and my own personal money. I think it's the best market to invest in right now globally. It's a very exciting market, but you have to do it their way. It's a big learning.
How do you handle payment failures, payment switch? Also, if you have returns, how do you handle that with direct debits?
We do it all internally. We manage all chargebacks and we manage all payment failures. We manage that all internally ourselves. So we don't outsource any of that. Say from our technology perspective and our payment backend, especially our backend, we spend a lot of time building for that. That's a big part of our investment area to make sure that the customer service for the merchant and the consumer, if there is a chargeback, if there's a refund, so we actually can refund directly to bank account. Now, that's from a technology perspective quite hard to do, but we spend time building that so that we can enable that to happen as well.
And so you're taking it out of the bank account of the purchaser, obviously. Does it go directly into the bank account of the vendor, obviously minus the cut that you take as the processing fee, or is there still any number of days delay built in?
Then there'll be some days delayed, yes, correct. So we're still proud we can refund it straight back to their bank account after a few days. And it's a full refund. We don't take cuts off it. The only interesting thing I would like to add is fraud and risk management is much bigger part of our jobs. And fraud and risk management is, I would say, 50% of your success going forward. Our mindset was very controlled growth. We take growth in steps, we learn, we add merchants that are risky, knowing that they are risky, and we learn. We hire people with really deep expertise in these areas of fraud and risk because the fraudsters these days are incredible. They make a move, you make a move, they make a move. It's incredible to watch that. It's scary to watch that. That's the thing that you don't want to underestimate is fraud and risk. That's not something that people talk about a lot, but where it is sexy, it's a lot of AI, it's a lot of data science, it's a lot of machine learning. Then you've got to fill your models with data, and you're quite vulnerable early on because you don't have a lot of data in the models. You have to assume data to put into the models, which you can do. We get modeling data from partners as well. But that's been a really exciting thing to watch. And to see the fraudsters at work is very scary at the moment.
Given your average ticket size, it's not like somebody going into a Famima or 7-Eleven and buying a sandwich for lunch. Good risk management must be in place, otherwise you won't be successful. What is the volume that you see, or from which sectors do you get your volume so far? And also, where's the future growth coming from?
We focus on 4 sectors. 1 is fashion, 2 is sporting goods, 3 is household goods, and 4 electronics. They're our key focus areas, and we'll stay with those areas. We would like to expand to new sectors, I would say in 6 months' time, that are higher risk, but higher spending. When I get close to the time, I can let you know what that is. We do have some sectors that we are looking at, but it's not about the volume, it's about the risk profile that we have to manage. Yeah, that's been interesting as well, because there's these huge pools of volume out there that I would just love to grab. But my risk managers, sorry, we're not ready for that. But that would be in about 6 months' time. How do you onboard a merchant? With Shopify, it's a 5-minute process. We have an integration team. We have fully automated integration. For bigger merchants, we have an integration process that's often through their platforms. We are assigned a timing to work with their EC platform, and then they get integrated. But if they're on Shopify or the platforms that we are on, it can be up to a 10-minute process, which is great. That was one of the learnings that we had from our past experiences, was if you don't make the merchant integration process really good and really smooth and high quality, your whole business model can fall down. So you can focus on sales and marketing and UX and tech and look really flashy, and you forget about integration. We knew that had to be perfect. So we spent a lot of time on integration processes and APIs. In the business model, how you have set up a good working model for new startups in other countries, what would you change? My view, and it's my view only, is what I do is I like working with the banks. There's a lot of fintechs out there that say they're going to be the next bank. We're better than banks. The banks are old and nasty. I'm different. I like to work with banks. So if I go into another market, which obviously we are assessing, we would work with the banks. And I think that is potentially the sort of next level of how companies like mine will work. Obviously, I come from banking, so I like to work with the banks because my fundamental belief is the regulators want the banks to succeed. We as an economy will not enable our society to happen if the banks fail. I'm kind of betting that the banks will always be there. So that's why I think that I like to work with the banks.
Thinking about risk to the model of the proposition in the end, and I was thinking about it in the context of my introduction to different models, and the one that we haven't really seen also in the open banking context in Japan, but it will be there by autumn, is account-to-account payments. So even taking the direct debit out. And I think that obviously would take time to implement and to roll out, but would you see that as a competitive risk in the future?
We will obviously try to innovate in that space, but you've got to remember that's a little bit different than what our core business is, which is consumer credit. You can do that, but it's not really involved in the consumer credit process. My findings from when we were building for WhatsApp is the margins are pretty thin in that area. If you're going to go into that space, you've got to be very good at capturing the pennies.
Totally agree.
That's where a lot of payment companies have learned in the last 5 years, is the payments look a lot of fun, but you've got to find where the money is. That's the hard part. But there's a lot of players in that one payment, isn't there? The issuer, an acquirer, a bank, a merchant, MasterCard, Visa, Stripe, Adyen. It's like there's a lot of people taking money off that ticket.
Thank you very much. That was a really great presentation and fantastic discussion afterwards as well.